Market Update. Speed Round. Award-winning financial pro. And now, get ready. I present to you Level Up with Winnie Sun.
Hi, friends. I'm Winnie Sun, your host and award-winning financial pro, Forbes contributor, and a CNBC council member. We are, in fact, streaming here live on over half a dozen social media platforms. So definitely jump in, take a moment to say hello, introduce yourself. It is great to have you with us currently. Well, currently the market is still open. So let's jump in and see how it's doing currently. Let's take a look. It was kind of choppy earlier today, but the Dow currently is up 221 points, which is wonderful. Nasdaq is also up 229 points. We'll take it. And the S&P 500 currently up 51 points. So triple positive. We'll see, and we'll check in again before the end of the show to see if the market continues to do well. As you know, the market doesn't close for a few more hours, so lots to be paying attention to as Fed chairman is on vacation and Wyoming, but there is a reason for that too. So we'll jump into that in just a second. So lots of momentum. Certainly, the Nasdaq is surging, and we talked about the Dow also surging. S&P will take it as well. A lot of people are watching to see what's going to happen with Nvidia. Now, if you've been following the whole story of AI, this is sort of an AI darling that a lot of people enjoy following right now. This is the leading chip maker. They're set to release their second quarter earnings after the closing bell today when the stock market closes. Now, analysts are predicting year over year increases in Nvidia. So we'll see how it's doing, but so far it's the best performing name in the S&P 500. Now, other companies that are facing some volatility, including a lot of names in the athletic goods space. So some of them you'll see they've been going up and down, and some positive, some negative, because everybody's sort of paying attention also to the Federal Reserve Symposium, which I had mentioned is happening in Jackson Hole, Wyoming. So starting tomorrow, a lot of people are going to be watching this meeting. Fed Chairman Jerome Powell is going to speak on Friday, and everyone's wondering whether or not he's going to be signaling for more greater hikes in not inflation, but the interest rates to help mitigate inflation. So hopefully we'll get a better indication of whether inflation is coming down and whether we're going to see more rate hikes, because as you know, as we talked about yesterday, those mortgage rates are sky high right now. And I will say, I did get a note from someone on Twitter saying, they were much higher before, and people just got to get a better hold of paying off their debt. So everybody has a different perspective, and it's good just to hear your perspective as always. So I see Joshua CrossX Fighter joining us on YouTube Live. Thanks so much for joining us today. Really appreciate you being here. And of course, Vicky Garvey joining us from Facebook Live. Thank you so much for checking in and saying hello. And if you're joining us, I see a lot of friends joining us on different platforms. Definitely come in, introduce yourself, and we love to hear where you're joining us from today. All right. So yes, Fed Chairman, Federal Reserve's annual economic symposium is what's happening at Jackson Hole, Wyoming. This is going to be very significant as Fed Chair Jerome Powell will address inflation concerns here in the United States. Now, he is facing sort of a decision of whether to adopt sort of a measured approach with interest rate hikes due to the recent news of downward inflation, or is he going to continue with a more aggressive strategy to really make sure that we're able to achieve that 2% inflation target rate that he shared, indicating, which would then mean potentially more rate hikes. Now, Fed Chairman Jerome Powell does hope to achieve lower inflation this year, hoping to be able to do that while mitigating losses in jobs in the job market. And given that we have quite a very robust and brave economy and strong job market currently, hopefully that can be done, because currently it still looks like we're not quite there yet. And if you've been paying attention to your grocery bill, I'm sure you're like me and feeling like things are not getting cheaper. In fact, I feel like some areas are getting more expensive. And I don't know that in some, I guess some areas of our groceries seem to have quieted down a little bit, but they haven't gone back to pre-pandemic levels still. Now, yields on the 10-year Treasury note did experience a slight decline of about 5 basis points, which is 0.05%. So it's currently at 4.279% today. But this Jackson Hole speech is going to carry significant impact for us. And the reason why they do it in Jackson Hole, just so you know, this sort of tradition started in 1982. And I guess one of the earlier Fed chairmen loved that in Jackson Hole, you can do fly fishing, right? That is the appeal. So we'll see. We'll see how that goes. Speaking of things that we are still watching very closely, so we have something to watch, is what's going on here, and not just in Hollywood. I'm sure in other parts of the country as well. But of course, Hollywood in Southern California is known to be the entertainment capital, right? That's where a lot of movies are made, TV shows are made. Well, what's going on with those strikes? Because if you've noticed that there's, of course, some new releases, but not probably on your favorite TV series, may not be there yet. And you may be wondering if more episodes are coming and if it's coming back soon. Well, unfortunately, I feel like the answer is not yet because the Alliance of Motion Picture and Television Producers, or the AMPTP, did talk about that they are continuing to introduce proposals. It's a new proposal addressing residuals, compensation, obviously, the impact of AI in the entertainment space and production space, and of course streaming transparency. Now, Hollywood producers have made their latest contract proposal. They're making it public because they feel like with negotiations taking on, in some areas, almost 100 days now, the heated negotiations with the writers union, it just, people are not happy. The writers union, the Writers Guild of America, the WGA, has been on strike now for over 100 days. So they want to get back to work. This is impacting what you're watching on TV and movie production and what you'll be watching in the future, and how quickly new production will be made. Now, this new proposal includes a significant wage increase, they're saying, marking the highest in 35 years, with a compounded 13% raise over 3 years. Now, that can't help with inflation, but if you've been reading some of the news, it seems like it's very much needed for a lot of these production employees to, well, just keep up with the standard of living. Now, residuals, they say, will be increased, a new compensation structure will be established, and protections regarding the use of AI in the entertainment space will also be included. Now, this proposal aims to enhance data transparency for streaming viewership. Thus, you're seeing a lot of rate surges on what you're paying for streaming. This is part of it. I think a lot of streaming companies realize they're going to have to pay their production teams more, and it's got to come from somewhere. So it's coming from you and I as customers of streaming platforms. But they also said they want to provide training for writers to become showrunners. That's part of the proposal as well. But here's the thing, this is not done. Negotiations will continue. Both sides of the parties want to get this done. Writers continue to say they're dissatisfied. They're saying that these discussions feel like more of an attempt to just make them yield rather than really good faith negotiations. So based on that comment, I think they've got some work ahead of them, and hopefully we hear good news sooner rather than later. Yeah, thank you, Vicky. Happy Wednesday to you as well. All right, now I'm going to jump in to a story that we started yesterday, but this is something really important. So we're talking about, the housing market. In fact, I saw some research this morning about new home sales. So new home sales are like homes that no one's lived in yet, brand new construction. Well, new home sales did rise in July over 4% at 4.4%, showing that there's still interest in real estate, but people now are being more picky, right? We did talk about yesterday how inventory on existing homes has decreased, but then new homes Well, maybe they're able to do some, concessions and maybe giving buyers a little bit more because they're paying so much for interest and just getting them through the door with that new key so they can have that new home. But sales of newly built homes has reached a seasonally adjusted rate of 714,000 units, which certainly exceeded expectations. This was a 31.5% increase from last year, so that's pretty good. So, a surge in new home activity does show the trend of buyers turning to new construction just because there's just a lack of existing properties. And I'm sure that some of these new home sellers, are adding some extra frills to make sure that the deal is done. Now, high mortgage rates and, of course, inflation pressures have definitely impacted the mortgage and real estate industry, but not so much on new home sales. So they've certainly felt some benefit there. But certainly, we'll see what happens in the near future and if housing markets improve. But the estimated supply of new homes for sale in July was over 437,000, which is a 7.3-month supply at its current sales rate too. But I want to talk about mortgages in general. Yesterday we talked about sky high. Well, 30-year fixed rate is now at 7.62%, which is up by 11 basis points or 0.11% from last week. This is definitely a surge. And for some of you who've owned real estate in the past, like myself, 7.62% doesn't seem that high. I mean, I think my first mortgage I got was like over 8%. Though certainly not the highest it's ever been. I mean, there's been much, much higher than that. But in the last 31 months for sure, it's been a considerable increase. In fact, on a median home, if you own a medium home, which in the United States is about 410,000, that would mean that your mortgage payment would have increased $1,200 already. So that's pretty significant. Limited inventory. Of course, the pandemic had lower interest rates. Sellers are now feeling like they are getting priced out of the market and whether or not they can actually go back and purchase a new home, or especially a lot of people are renting right now, what can they do? So I want to share with you some strategies that you could explore to possibly increase your odds of getting into the home that you want in the neighborhood that you want. Well, first off, the first thing you want to do is consider improving your credit score. This is going to really help. If you have great credit, that usually gives you the opportunity to get the lowest mortgage rate from various different financial firms. That's the thing I would recommend. If you're in the market of purchasing a new home, definitely don't just settle on one. Do a lot of research. There's a lot of information online. Check with your local bank, your credit union. And what I like to do is have you print out your credit score yourself. You can go to annualcreditreport.com, print out your own credit report for free, and then provide that to the potential lenders and tell them not to pull your credit. That way you can see, do you like this mortgage company? Do you like the terms and the things they're offering before you let them pull your credit? That way you don't have so many inquiries on your credit score, because you don't want to have too many that could negatively impact your credit score as well. The other thing you want to do is to look at creative financing and innovative ways of home ownership, right? This is not one size fits all. So you might say, a lot of my clients have actually reached out and said, hey, what if I were to take a loan out of my 401k and use that money for a down payment? Well, hold on, you may not want to do that, because typically a loan against your 401k is based on the prime rate plus like 1 or 2 points above that. And currently the prime rate stands at 8.5%. So that's already higher than the 30-year fixed mortgage. So you may not want to pull from your 401k if that's the case. Some people say, well, maybe I'll take money out of my HELOC from one property to buy another property. Well, here's the thing. The HELOC rate, the average HELOC rate in the United States is now 8.8%. HELOC stands for Home Equity Line of Credit. So 8.8%, again, higher than the 30-year fixed rate. So it's really advisable just to make sure and check with your lender and make sure that these rates are what you have, because this is just an average. Your rate might differ from this. And of course, borrowing for the 401k does have that potential. You want to make sure that you're able to do so. Now, one caveat I will say is this: if you are over the age of 59 and a half, though, the IRS does have some rules allowing for a penalty free 401k withdrawal after the age of 59 and a half. Now, the exception applies if you're permanently disabled or unable to work. There might be other ways that you can utilize that fund, but just to give you an idea of what that would look like. Now, remember, when you do take a loan out of your 401k, if you're not just taking a distribution, but you're taking a loan out of your 401k, you typically have 5 years to repay that 401k loan as well. So just keep that in mind as well. Now, if you have Roth IRAs, you may have heard that if you have a Roth IRA, you can take out $10,000 for first-time home buyers. So that's important to know too, that withdrawal of $10,000 would be penalty free for a home purchase. And this exemption is kind of nice, but it helps you avoid penalties and fees for those who qualify to do that. Okay. Now, one more thing that I think isn't as well known that I want to share with you is called seller finance real estate deals. This is where, let's say you found a home and you have a discussion with the seller and you're like, we love this house, but we don't want to pay 7+% interest on the mortgage. Can we structure a financing deal directly with you? So you could actually structure financing dealing directly with the seller if the seller wants to do this. This could actually help simplify things, make it faster, and lower closing costs. Now, there are some buyer responsibilities, and typically these are for shorter terms, because typically, like a traditional homeowner might not want to lend you money for 30 years, right? But when you do that, there's a lot of things that you want to consider. And probably the most important thing is to make sure you have a promissory note and you have the right, real estate attorney help you draft this up and make sure it's all done on the up and you have great communication and you feel good about it. All right. Other creative ways of buying your next home is this. Of course, you can look into buying a smaller home or a little bit less desirable neighborhood and get yourself into a property that you feel comfortable with. But a lot of homeowners are now looking at something called accessory dwelling units, or ADUs, where you literally could put, if you have the lot to do so and the place that you live allows this, the area that you live allows this, you could actually put like a small house or one of those tiny homes or a shed or something like that, or convert your garage to extra bedrooms to generate rental income. Now, this is sort of a strategy known as house hacking. In fact, we're seeing more house hacking throughout the United States, and especially in desirable neighborhoods that have larger lots. In fact, we have some family in San Antonio, Texas, and they have a huge lot, and this actually would make sense for them. The other thing is you're seeing just a lot of people do cash deals. If you're able to have a lot of cash on hand, you can buy a house cash, and rate buy down. So that's where you can pay a little bit more to get your mortgage rate down. So you want to talk to your lender about that as well. So some different options for you to consider, but I couldn't end the show without showing you one thing that I thought was fun, and maybe something for those of you who have kids at home, or you're an adult kid and you're looking to save. This might be something to save. You're looking to buy something special around the holidays. I know this is really popular. Sony's now offering our show. Sony has introduced a brand new portable PlayStation Portal, and I just want to show this with you. It is the PlayStation Portal. It'll be available later this year. Rumor is that it'll be around November, probably perfect for the holiday season. But this will enable streaming of PS5 games over Wi-Fi, and it comes with an 8-inch LCD screen, which makes it very portable, featuring a 1080p resolution of 60 FPS. right? This is going to be priced around $200 at $199.99. Just say $200. It's going to connect remotely to a PS5 over Wi-Fi. So this is going to allow you to toggle playing between the PS5 and this handheld device. I can see people really enjoy this when they travel, right? Especially on the plane. It kind of reminds me of the Nintendo Switch, but it looks like this will just give you more options because I know Sony PlayStation traditionally has more robust games, right? This is going to have dual sense controllers. It's going to support adaptive triggers and haptic feedback. I'm guessing Joshua might be enjoying this. Joshua, who I know is a regular with us on this show because I know he's all about gaming. So this can be used for media playback and it can mirror the PS5's home screen. But do know that it's going to, for local running of content, it won't be possible without Wi-Fi. So there's going to be some limitations. If you don't have Wi-Fi, you can't do everything that it can do. I know Joshua is saying Nintendo Switch, but this PlayStation Portal it won't work with Sony's cloud streaming for PS5 because that does require PS Plus premium membership. So yeah, so we'll see how that goes. But I'm just curious to see how many of you is this interesting to you. This rumored release date is going to be in November. Is it going to make it to your holiday shopping list? Let me know. Let me know what you think. I know there's a lot of big Sony PlayStation fans out there. And of course, drop us a message. Let us know what you think this is going to make your holiday list. And if you have a Sony already, PlayStation already, what are you excited about playing on this device? I know there's a few of you out there, so be curious to see what you think. I don't think it's going to make it into our household because the kids are so busy with everything they've got going on already. But I think it's pretty cool. And it'll probably be, if you're looking to do that, you can start saving up early and plan ahead so you don't get yourself in debt, right? And with that, thank you so much. I truly am grateful for you tuning in. I hope that you are having an amazing and productive day. If you found this video helpful, make sure to hit that like button and hit subscribe so you can catch our next updates. You can find full episodes of Level Up with Winnie Sun on NASDAQ and many other platforms. And you can also check out Yes Factor with Winnie Sun on Apple Podcasts and the LinkedIn Podcast Network or anywhere else that you tune into podcasts. With that, thank you so much for tuning in. We're going to have another fun episode planned for you tomorrow. So I'll look forward to seeing you then. Have a wonderful day. Stay safe. Take care now. Bye-bye.